I do think gold has a good chance of crashing further. And when it does, every headline on the planet is going to scream that gold is finished, it's a failed safe haven. They always do this for centuries. They've been doing it. And let them do that, because we have watched this shit happen time and time again. Let me take you back to March of 2008. Gold hit $1,000 an ounce for the first time in history. Everyone loved it. They were really, really happy. Then the financial crisis just, it kicked off, right? Lehman Brothers collapsed. The whole system was on absolute fire. Everything was crashing, and gold got absolutely smashed. It fell 25 to 30%. I can't remember the exact number over those few months, all the way back down into like around about 700. Exactly what we just talked about. Funds blowing up, dumping their gold to cover everything else. And the press, they wrote gold off completely. They were saying, oh, like as if it's not a safe haven, it's just crashed alongside the stock market, as if that's never happened before in history. They always do the same thing. And then the Fed did what it always does when the market's breaking. They panicked. They cut rates to zero, they fired up the printing press, trillions of fresh dollars got printed. And gold didn't just bounce back. It didn't just bounce back from that crash. It went on the biggest run in modern history. It nearly tripled from its low at 700s. It went all the way up to about 2000 by 2011. And silver did even better. Silver is just like the leverage version of gold. It falls harder, but then it runs harder. In 2008, silver lost like 50 to 60% of its value, from about $21 to I think it was $9. People gave up on it completely. Then from the $9 low, it ran to nearly $49. That's about a 5x in just under 3 years. So look at the two crowds here, right? The people who panicked sold their silver at $9, sold the exact bottom. They felt the fear and they ran. The people who understood what was actually going on and sat tight, they did very, very well. And the other thing is, SPX in 2008 fell like something like 50%. Apple fell 60%, Microsoft fell 60%, gold, like I said, fell 30%. And yes, silver fell more than SPX, it fell like 60%, but then it had a 400% run, while SPX had a 100% run. But that's 2008. Let's talk about the year 2000, because that's even more fun. It's even more comparable to right now, because the current AI bubble is just like the dot-com bubble. There's going to be a bunch of people who say in the comments, oh no, it's not like the dot-com bubble because AI has profits unlike the dot-coms. Oh, I love Elon Musk, he's going to make me rich. Just some people can't be helped. It's like the dot-com bubble. That's what we're in right now, very similar. So let's look at the last time a tech bubble popped, the year 2000, the dot-com crash. Back then, everyone was certain that the internet had rewritten the rules forever. Any company with a .com in its name was worth an absolute fortune. Profits or no profits, sound familiar? Then it popped and the NASDAQ, the big tech index, fell 78%. And it took a full 15 years to crawl back to where it started. Imagine putting your money into tech in the year 2000 and getting nothing back until 2015. A decade and a half of dead money. Actually, you know what? Let me show you something crazy. Whenever I talk about this, it blows people's minds. Look at this Microsoft chart. It topped in the year 2000. It crashed. How long before it hit its all-time high again? I want you to guess. How long before Microsoft hit its all-time high again? 17 years. From the year 2000, it took until 2017 for Microsoft to regain its all-time high. I got another crazy one, by the way. Intel topped in the year 2000. How long before it regained its all-time high? April of 2026, 2 months ago. If you bought Intel at its high in the year 2000, you had to wait 26 years for it to break even. And when you factor in inflation, you still haven't broken even. So tell me again that Nvidia can't crash and it can't be down for a few years or maybe even bloody a few decades. And this is why I got out of a lot of my AI positions. I don't want to be stuck holding crappy AI trash, completely overvalued stocks that have dropped 70, 80% and are going to take a decade to regain their all-time highs. Let's look at what gold did in that same period. So gold was sitting at 255 an ounce when the bubble burst. Over the next decade, it climbed to nearly 1,920 an ounce, around 7.5x your money. So while the tech crowd waited 15 to 26 years just to break even on their positions, the gold crowd made 7.5 times over. By the way, guys, if you want to stay updated with what's happening on the markets and my personal strategies, make sure you subscribe to my free newsletter. Like I said, it's free. I publish a report on everything you need to know about the markets every single morning. Basically, I read 20 to 30 articles, I summarize them so you don't have to. There's a link below.